We'll see. I mean, indeed, the uncertainty is big. That's no surprise to you. I mean, my guess it's going to be if we have tariffs, and apparently they will come, and they might be quite high. It will be, of course, bad for growth, and it probably will be inflationary. How much depends on the reaction of the exchange rate, whether there is retaliation. So, of course, this is going to be a very difficult environment to navigate, because if it's pushing the inflation up and the growth down, then the question is whether we have to look through or not, and this is going to be a difficult balancing act, yes.
So if I hear you right, what you're saying is that what Trump does on the 2nd of April could have consequences for what you decide on interest rates just days later at your meeting?
Yes, of course, to the extent that tariffs will impact the economy, and even though we will have to have a rough proxy for what the impact might be, this will have an impact on our decision making. I wouldn't put too much focus on April, and it's going to have an impact over the medium term.
What we heard recently was from Francois Villeroy-de-Galhau over at the French Central Bank. He was saying a 25 percentage point increase in US tariffs in the second quarter could have limited impact on European inflation. Do you agree with that? Do you think that there's no inflation impact, it's purely on the growth side?
Well, I think it's a bit more complicated than that. If we go back to the election day and after the election day, you saw a significant appreciation of the dollar compared to the euro. And there is this story that at the end of the day, the saving rate in the US is low, and that the variable that's going to adjust is the exchange rate. So if you have a 25% tariff, it might indeed lead to a depreciation of the euro. You might have some retaliation. So my impression is that my guess is that it will have an impact on inflation. How big? We don't know. And of course, it will have a negative impact on growth. So that makes it a difficult balancing act.
The factors that you've been looking at so far has really been on the services side. Energy has obviously been a component in recent years too. If you take the tariffs aside and you look at the other normalising factors here, would there be a case for a rate cut?
Yeah, I mean, again, I don't want to focus too much on April, but we were going in the right direction. And I was actually quite relaxed. I mean, if we forget tariffs for a minute, we were going in the right direction. Then the question was more a question of fine-tuning the pace of cuts and where we land. But, I was really relaxed. I was like, inflation might be the boring part of 25. And 25 is not a boring year. But if you add tariffs to the equation, it's becoming more complicated.
I mean, I hear you. I was having conversations with some members about whether 50 basis point rate reduction would be warranted and whether the ECB was behind the curve at some stage. Now it almost feels like whiplash because some market participants are saying, well, maybe we should be talking about the ECB hiking rates in 2025. Is that a scenario that could actually materialize?
I think the likelihood is still limited that we would have to hike, but there might be a case for a pause. I'm not saying I'm pleading for a pause in April, but it's certainly something that should be on the table. It's not like I said we should not sleepwalk, and we're not going to sleepwalk to 2%. If tariffs have an inflationary impact and a negative impact on growth, it's going to be a difficult equation, and we might have to consider a pause. I'm not pleading for one, but I think it should be part of the discussion.
The ECB calibrated what exactly the hit would be from tariffs in recent days, 0.3% on GDP, rising to 0.5% if there's retaliation. In that context, there's also a European plan to get growth going again. To what extent will the big pledges from Rearm Europe across from Brussels to what Germany's doing with its fiscal package help compensate for any tariff impact?
Well, I think the game changer is Germany, because they've put a lot of money on the table and their fiscal room. Europe is saying you may spend more, so we will be flexible in the way we apply the rules, but it's still not clear what the impact of that part of the story will be. But what's going to take place in Germany is significant, and you could say could to some extent, and even maybe to a large extent over the medium term, compensate for the tariffs in the US. Now, if that's the case, and you have some retaliation and you have maybe some depreciation of the euro, it might be the case that over the medium term, what we are going to see is an impact of tariffs and fiscal expansion, which is more or less compensating each other, and the remainder of the impact of the tariffs that would be, hiking inflation, which is also why we really have to consider not only April, but what might be the future over a year or two. And if, the risk might be on the upside on the inflation front.